Alright, Masters, I'm back. This is Fahad. Today I'm going to take a look at yet another one of my top 10 picks from last year, from 2015. The stock is Criteo. I think I'm saying this right. Criteo, maybe it's spelled as Criteo, I'm not sure. I think it's Criteo. The symbol is CRTO. You guys are very familiar with this story. It was one of our best picks. It made a ton of money before it fell apart in the second half of last year. But so here, let's just quickly show you. This is the weekly chart right here. You can see I made this pick as one of my top 10 picks right here at the start of 2015. For the 6 months in rally, this trader went from 40 all the way to 55. This thing was up close to 40% on the year before it came crashing down, and now it has been consolidating for a while. So what happened back then, right over here? Well, it's partly because of the function of the overall market, because it was come crashing down. But see this giant spike down right here in August? Remember, that was a day when the Dow fell 1,000 points in one day or something, so there was partly because of that reason. But one of the main reasons why that happened was also because there were rumors that Apple was looking to stop from outside third-party software developers to create a search function for their mobile browser, which would basically eliminate all kinds of pop-up advertisements that are now starting to appear on cell phones. So basically that meant that Criteo may lose some business, and the stock crashed at that time. But you know what? It stabilized immediately, and then now starting to rise again. That did not change anything. It was just bogus rumor that never materialized. We saw the iOS new software came out. Nothing changed in that. So basically, fundamental picture, nothing happened. But now, after the deep correction and after 9 months of consolidation, I think this is ready to pop, and this thing is going to break out. So first, again, every time when I do these videos, and every time I present a bullish idea, whether I write it on the blog and post it or I do these videos, the objective always is to base it on three critical ingredients: fundamentals, technicals, and option activity. So let's take a look at technicals first. Right here is your chart. I think this thing is going to pop and it's going to break out. So right here you see this giant volume of a price resistance that has been consolidated. So it's like a big congestion area right here. You're seeing a very nice candle formation, and it's starting to run back again. Right here, if I put my finger around, let's call it, to be on the safe side, right here, I'll call it around 4150, 4160. 4160 is the level. If it breaks out over here, it opens the air pocket from 4160 all the way to right this level, which is 4550. Okay, so we're looking at $4 to upside, $4 divided by 41.6. We're looking about 9.6% to the upside. Call it about 10%. From 4160 is the breakout, and your target would be 4550. Okay, 4550, and I think you're going to see that pop happen probably before earnings or sometime right after earnings, which are coming up on May 4th. So you have some time to place a trade, but I think you shouldn't wait. You should just go ahead and place the trade. All right, taking a different look at this, here is the same chart from stockcharts.com. So here is major volume of a price resistance coming into play around 4160. If it breaks out through this, I think you're going to see this climb higher towards 4550. All right, so that's another look. Now on the option side, all right, here is the option market. Now this thing doesn't really trade a lot of options, even though it has been one of my favorite stocks. It has never really traded in the option market for a while, and if you look at the calls and put open interest, there's not much to say. All right, it remains mostly under the radar. But here today they came out and they started buying June 42.5 calls. Now, in my opinion, these calls are actually pretty cheap. They carry a delta of 0.46, which is pretty attractive. I look for anything that's above 0.30. They will cover the next earnings earnings that are coming out sometime in May. It's a high volatility stock that is looking for breakout, and these calls are going for bid and ask for 220 to 265, and they paid how much? Let me check real quick. There was a big block of 1,188 contracts, so you can see it right here. They went off at $2.35. Okay, so that's approximately $260,000 bullish bet. They bought June 42.5 calls for $235. They paid 235 when the bid and ask was 190 times 245. So very wide bid and ask spread, 190, 245, and they bought him for 235. Call it about $260,000 bullish bet. All right, and so they're basically looking for the stock right here to break out, and I think it's going to go to 45.50. So we have bullish activity taking place today in June, 42.5 calls. We have a chart that's setting up for breakout, and now let's diving into fundamentals. Now, once again, since this was my pick, if you simply go to the blog, this is right here's the blog. You go to Open Order Pro, or if you are watching this from Open Order, same thing, and you can just go to Open Order. Scroll down, go here, go all the way to January 2015. The website is working a little slow today. Go down to January 15, go all the way here. You'll see my top 10 picks for 2015. If you're looking for pure fundamental background or basically why I like that stock so much and it remains so out of radar, right here is Criteo. I'm just going to simply search it, Criteo right here. Alright, this is where I explain in detail why I love this stock. Okay, the most important point that you want to focus on when you're reading this to kind of remind you why I like this so much is this part right here, the competitive edge. Okay, this is where I basically laid out the story. Alright, so read that and then you'll know exactly why I like this stock. Now on to something more recently. Okay, see this giant pop? Or you can go to stockcharts.com, you'll see the same thing. You see this massive high volume pop in February? That's when the company reported earnings. Alright, now remember what happened back here in August, and then what happened over here? There were concerns that Apple was going to remove Criteo from powering the search results, that are seen in the browser. And so this stock was coming under selling pressure. Along with it, the market was not acting very well. The multiples were coming down. The company basically blew estimates out of water big time. They said, heck no, we're doing fantastic. The earnings are going to be fantastic. And that's exactly what we saw in February 10th. To tell you how good they were, right here. Okay, so let me make this a little bit bigger so you can see. On February 10th, the company reported, now this company is based in France, okay, so it's a French company, so all the earnings are reported in euros. The Q4 EPS in euros was 66 cents versus, or 66 pennies, or whatever you want to call it, versus 40 cents estimate. That's a 65% beat. That's 65% above what the consensus was thinking. The revenues were 146 million euros versus 138 million estimate. And the most important thing was the company exited 2015 with record 10,000 clients with a retention rate of 90%. And that's what popped the stock higher right over here. Alright, to show you this another way, if I go to Ameritrade right over here, I'm going to make this bigger. Look at what the earnings are doing. Alright, so here you had a little bit of concern for most part of 2015 after initial ramp higher that you're going to have, possibly consensus was flatlining because they were seeing that maybe this company will not be doing very well if Apple takes some adverse action. Didn't happen. The company popped, the earnings popped big time, and now what you're seeing is the fiscal year 2016 EPS estimate that at the start of the year was $1.43 is now $1.70. The 2017 estimate has gone from $2 to $2.23. But the story gets even better. Alright, here is the note from Citigroup. This was on April 11th. Okay, now in this case they discussed a lot of stock. This is a giant file. I'm on page 82 over here, as you can tell. I'm going to tell you exactly what caught my attention because this is the kind of stuff that nobody actually pays much attention to. Okay, now the first part that I like to see, and I mentioned this a little bit already, is this right here. This is, there are only two companies, Criteo and Rubicon, R-U-B-Y. There are only two e-commerce growth companies that are actually free cash flow positive and have the highest margins in the industry. You want to see what Rubicon is doing? Let me show you. Alright, we move this here. Here is the symbol, Rubicon. Take a look at that chart. Look at this. Big giant pop in February just like Criteo, and then it just continues to power higher. Non-stop. Another off the radar stock that nobody cares for. Let me see if they have any kind of option activity. Okay, I'll take a look at what happened here, but again, very low open interest, nothing is happening. But look at this thing, powered higher and just continues to break out. I see the same exact thing happening through Criteo. These two stocks, Rubicon and Criteo, are the only two e-commerce growth stories that are cash flow positive. All right. And they are maintaining 40% consistently. They're maintaining 40% top line revenue growth, and they're cash flow positive. Okay, and forward earnings multiples are in high teens. These are not expensive stocks. Okay, so that's what, first of all, is the first thing that stood out for me. The retention rate, that's another thing. 10,000 clients they exited when they completed 2015, and with a retention rate of 90%. That tells me consistency. That tells me that the earnings are not very, very volatile, because this is consistent growth. The third thing that stands out for me is that their customers, their budgets, their ad budgets are basically uncapped for the Criteo. Now, there's a big theory behind this why such is the case, because when somebody creates in their advertising budget, this is basically part of their engine, of their search engine. So Criteo is an integral part of that. In other words, with high retention rate, you see very little noise from quarter to quarter with uncapped budgets from the customers. But all of this is one good thing, but this is what gets the most attention that I'm not able to. By the way, here's the chart. All right, so this is your net revenues. Let me make this even bigger that you can see. Right here, you will see. Here is the Criteo's the e-commerce growth, which has softened just a little bit each quarter starting from 2015. But here is net revenues of Criteo, right here, consistently. Record revenues, we're going to see consistent. Here is another ways, the total number of clients, Criteo clients, steadily rising. But that's not even the biggest thing. As the client growth is steadily rising, actually stable around 40%. That's what I was talking about, 40% revenue growth each year. The retention rate is also rising. That has to speak for something. All right. But the part that I like the most is this right here. And I don't even know, frankly, how to explain this. So I'm just going to briefly mention this, because this could be something significant. And because it's not in anyone's model, this could be something significant. It's called search is a call option. Now, in 2015, in February 2015, Criteo bought a company called DataPop, based in Los Angeles, that focuses on optimizing e-commerce advertising in search engines. I'm not exactly sure how this is going to change the argument going forward for the forward earnings outlook, but there's a part here where Citigroup was making a case that if this thing were to materialize based on what they're expecting, this, as we noted in our industry review, search is the largest component of all digital marketing, but largely not part of the programmatic discussion. Going earlier in this report, the Citigroup mentioned if this were to work and is in the phase of programmatic discussion, you could see the forward earnings estimates just blow out, just companies just blow those estimates out of water big time. I mean, I don't know exactly how the math works. I have not been able to basically get my whole arms around it, because we're talking very technical issue here. But there was a small little piece of snippet of information here that I picked out, which calls for search as a call option after this acquisition was made in February 2015. If this thing works and they actually ended up building into their programmatic discussion going forward, remember the company's revenues are tied directly to the e-commerce revenues, and with 90% retention rate, there's a whole new leg higher. There's a whole new leg higher going forward. I mean, right here, the Citigroup goes to show, if the company is able to enter the market successfully, an entire new source of inventory should see an even greater acceleration in spend per customer. Boom. Right there is basically the bottom line of this. It's fresh, brand new thing that started last year. I'm not sure exactly how this will work on the fundamental side, on the number wise, but this is like a call option. If it works, we could be looking at something absolutely monumental. So here's basically the case over here. Chart is breaking out. I think the chart is going to break out and it's going to run, and it's going to target is about 9% to the upside, which is 45.50. They're buying June. This is Rubicon. So here's CTO. They're buying June 42.5 calls. They paid $2.35. Now the bid is $2.35. The ask is now moved to $2.65 as the stock keeps grinding higher. And the last thing is that we just discussed fundamental option activity, fundamental discussions. And if you want to see exactly from the basic what this company does, pull my research note that I presented way back on January 2015, and exactly you will know what I'm talking about. So how would I trade this? No rocket science here. Just follow the money. Keep it very simple. Go straight to June and buy June 42.5 calls. You know, they're going for 235 to 265 right now. I think you can buy them for 255 to 260. All right, you can probably get a fill to 255 to 60, to slightly above the mark. Buy them. No spreads necessary. Just buy straight June 42.5 calls. The earnings are going to be coming out on May 4th. Look for this to pop all the way to 45 to 46. That's it.